Let's see if this is a little bit. Let's hello. See if this is a little bit. See if this work a little bit. Let's hello. See if this is a little bit. See if this work a little. Okay. Let's see. That should do it. How's my audio going through? Can you hear me now? The sound. Alice? Okay. Good. Well, that's good. It's always good when your audience can hear you on a live stream. My audio says it sounds a little echoey. We'll have to see how it sounds for the audience. Really strange. How about now? Can you tell me? How's that sound? Get these. We're starting up a new season, so there's just a few technical kinks still. For that. Is that good? Okay. Something going on with the audio. I need to work on this a little bit. Get it figured out. Um. Anyhow, welcome back to another B2B Rocks. Just go over a few things really quickly. Um. So odd. Yourself with a little echo. I really wish I could make that. In any case, we'll have to figure it out a little bit later. So, welcome. We're back. We're excited. We're going to be doing shows every week up until B2B Rocks. B2B Rocks, the event, is going to be happening on September 19th, Station F. These events are really important. Why are they important? Get to learn what people are thinking, what's happening in industry, networking opportunity. There's just lots of good reasons to do this. And it should be a lot of fun. I'll be there at Station F. So will your Rocks team, partners. Really looking forward to that. Please, if you have any questions today, put them in the chat. Questions or comments, put them in the chat. Always makes it more interesting. What was I gonna say? Hasn't startups, hasn't the session been a really interesting place of the last 6 months? So we had a little bit of a downturner, and I thought it was just kind of a slight downturn. And then a lot of stuff happened. There was kind of a confluence of events. There was the economy, the war in Ukraine that's been going on now for 17 months. A lot of things going on right now. So much. And the like the SaaS economy, what happened, the downturn was deeper. And there's kind of a reposition in the industry. It's actually, in many ways, it's kind of a good thing. When you think about it, it's really kind of a good thing. And why is that? Why would that be a good thing? Well, it's kind of funny. One door shuts and another door opens. That happened. That's kind of a very American. I guess that's not just, bad things happen or a possibility. Other possibilities focus. I think that's really exciting. Well, today we're going to talk a little bit about what the current startup environment looks like. So, what the current startup environment looks like provides some context on how I think the industry is evolving. Then we have our guest, Adrien Chaltiel. So he's CEO and co-founder of Eldorado. So a lot of the industries that started around the gold rush enough are still around. A lot of big companies, Wells Fargo, Levi's. So hopefully that'll happen for startups as well, and SaaS industry as well. He'll be arriving around 5:45. 5:45. Until then, I'm going to be providing a little context on what's going on in the industry. So I have three things I'm going to show today. One is a report from Deal Room titled Venture Capital in Europe 2023. So we're going to look at what the data says. Then there's a really interesting article, kind of an anecdote article, written about a company trying to raise their Series A and the challenges. I think it's interesting because I think it's an opportunity to dig a little deeper and ask some questions. And then finally, we're going to talk about an article written by a guy, Ben Murray. So that's, I'm going to write his name in the chat room. I really like Ben. See why as I article. But he talks about a thing called average cost service. So it's a KPI. He's very important to companies that they can measure what they're doing. Look at that. And we'll talk about what average cost of service is, why I think it's important, but additionally, why I think KPIs and CFOs are increasingly important. And we'll see if Adrien Chaltiel, when he comes on here, we'll see if he backs me up, if he agrees with me, or if he disagrees and thinks it's a completely different idea. So with that said, let's move on to the report a little bit. No, this is this I want. Okay. So here's the report. Am I allowed to use that? No. So the report, they talk about global situation, European situation, and they dive down into UK and the new Palo Alto. I wasn't even familiar with the term Palo Alto. Apparently, that's associated with. But we'll dive into all these things, and we'll look more closely at the numbers. So the first top line number is investment. This investment is down 64% the first quarter. And I guess given what we've seen, the overall economy, or just a lot of uncertainty, confluence events, it's not too surprising. There's also a tech meltdown. So all the emphasis before this kind of thing started slowing down on growth. And now everything's pivoted. Everything's on profitability. So whereas before investors were asking, what's your path to growth? Now they're asking, what's your path to profitability? How are you gonna make this company? And this actually ties in later with what Ben talks about in the article, average cost of service. So things are down. But there's a lot of interesting things going on, especially AI. So we see AI is hot. That's not any new to you. Interestingly enough, as a percentage, then my voice. Early stage and Series A investment, so pre-seed, seed, Series A are all down less than the other bigger rounds. So still a good amount of smaller companies spinning up. There's fewer companies getting big growth rounds. So that's interesting note to dig in. Especially unicorns. No unicorns happening. Unicorns have gone back to being a mythical animal. I really got to figure out my audio thing. So if we look a little closer to the numbers, early stage 50 billion, breakout stage down 32%. Breakout stage 26 billion, and these are global numbers, down 51%. And late stage, so the hyper growth, the unicorn rounds, down 71%. So there's less appetite, big rounds. I'm gonna get it. When you look at companies, I cited them as video, they were making big growth promises. Then the market shifted and shows profitability. Then they started focusing on profitabilities. They still haven't gotten there. And I think retroactively, vision being what it is. Oh, sorry. Uh, yeah, I'm sorry. I wasn't sharing it. I thought I was sharing it, but I wasn't sharing it. 1 second here. I got to send a message. So back to the slides. So investments off. Okay. Unicorns are off. Next slide. Unicorns are off from my notes here. So, I mean, look at that huge spike. What happened? And now things have come back to reality. Good news is, around the world, there's unicorns everywhere. So, what sectors remain interesting? And that's kind of interesting. So, the things that remain interesting for everybody in 2023 are financial technology, energy, cybersecurity, semiconductors, legal tech. So it's really gone back to solving problems. Got to solve real problems. Anything fluffy, anything that doesn't clearly generate benefit, monetary benefit, goes back to making more money, saving time, being productive. How are you going to help us do those three things? Market has really settled into logic. It's and that's kind of what happened with technology. Everyone gets really excited. There was the .com bubble. There was petfood.com that raised $1 billion. Then that would probably be like $1 billion today. Inflation, I'm not sure about that. Um, and then that went away. Companies all of a sudden much more serious. And in 2001, September 11th, tech sector just kind of imploded. 2008, 2009, same thing with the Great Recession. Lost a few companies there. What happened is each time this industry challenge tends to get more serious. The investors get more serious, but also the trading the company. So I think that's an exciting thing, and I think it makes a lot of sense. You look at nature, like, and I always compare technology to ecosystem. It takes a lot of different factors to create a thriving ecosystem. But when you look at ecosystem, there's extinction events. After that, there's all kinds of new life, kinds of new species, and only the successful species survive each extinction. Um, so on a more granular level, so clean energy, innovative food, agritech, waste, autonomous, regulation technology, And I think what's going to happen is the technology and the techniques to building SaaSes are democratizing. So more people, instead of being technology people that go look for a problem, it's going to be people that work in industry know about problems. They'll go work on these things. So they'll bring more industry experience, and they're going to really focus tightly on a problem. And we already see that in some industries, like for example, everything that's around green tech right now. Most of the companies partner on the technology side, and there's a partner industry experience on solving a real problem. So I think that's really interesting. Um, what else do we have to say here? Um, so as I said, seed stage venture doing really well, especially in Europe, especially in France. Interestingly enough, France upped the trend, and there was more investment on the seed side in France in 2023 than 2022. Um, Curious. I don't think there's a simple answer to that. I think one, it's because France has a lot of educational institutions creating a lot of deep research. So there's a lot of great ideas out of here. Maybe optimistic else. But it's really interesting to see that what's happened. But in general, what we see is there's different risk cultures. But we also see that the US started technology and remains the mammoth, giant elephant in the. And so while technology has spread really the four corners of the globe, Americans still to a great extent dominate. I guess like 50 best cross border. To see what's happening with that. Um, um, so something like 400 billion waiting to be invested. Um, Really interesting. We'll have to bring that question up to Adrien and talk with him all that dry powder. What investors, what they'll need to let go of some of that money. Um, I think all this dry powder. I mean, one thing is around the world, interest rates are up. So there are some alternatives to what you can do with investments, although VC investors aren't really interested in buying corporate bonds. But I think there's also another point to that with the days of cheap money, at least on the short term, inexpensive money. So like borrowing, or at least for the short term, are pretty much over. So the dynamics, a lot of the macro dynamics, investment side have changed. I also think a lot of disruptive events on the horizon. So we have elections coming up. Fortunately, the U.S. 2 years out start looking towards the presidential election. That's kind of a disruptive event. Of course, there's the war in Ukraine. So there's a lot going on around the world. We shouldn't underestimate greed. Greed, greed is unbeaten. So, if the investors are there, why do they want high growth? Why do they invest in these? Because they're looking to double, triple, quintuple, xxtuple their money. They're attracted to big ideas, disruptive ideas, world-changing ideas, things that can generate a lot of capital. That kind of thing you're on today. Um, so we said there are no unicorns this year, but there is something really cool about unicorns. Is unicorns are now around the world, so we find unicorns everywhere. Um, and I think that's one of the things that we like most at BT. This culture, technology culture, which now it's fast, about disrupting things, about taking an idea and making it better, or disrupting industry, creating new, better ways to do it. And the organization taken to build this, problem solve, build top flight organizations have literally spread to four corners. But it also means um, recently governments, this is going to be about which governments create the best environment. There was a comment, or there was a thing I read about, well, it'll be later in the presentation. Okay. So I mentioned France. France is plus 8% VC investment this year. And then you look at all the other countries, they're way off. Israel is even down minus 24%. United States down a third. China in the same boat. India and Germany down nearly 50%. And France still up 8%. So it's kind of interesting. I'd be curious to see why that is. Oftentimes we tend to say it's a reason. In my experience, things tend to be multifactorial. France, for example, has great educational. A lot of people coming into these universities and research organizations, great ideas. And that's one thing you really need as far as a tech macro environment, great education. Europe. Okay, some more details on Europe. So as far as overall investment, it's very similar. There's not too much talk about that. What are they? Almost all the fall has been in the late stage. So still a lot of early stage investment. I think these companies start seeing the next round of really interesting companies right around the corner. So it's the number of seed and Series A 2012 has grown by 4.7%. I think this is a point to just how successful this model is. And also really a change in culture. You know, early on, companies had to go to the US for venture capital. They went to the US because there wasn't the appetite for risk in Europe. There was in the US. But if you actually study risk model, taking more risk, especially earlier on, typically pays off. If you're too conservative for too long, you tend to lose out. And that's certainly true historically of investment models. But in any case, Europe is still doing really well on the Series A. More and more rounds, more and more activity all the time. Another country that's seen, so UK, France, Germany raised the most capital. Great. Also, Switzerland up the trend. So Switzerland saw a lot of growth. So France saw plus 8%. Switzerland saw plus 34%. I'm not really sure what the size of Switzerland's economy is compared to France's or other countries, but that's double-digit growth. That's pretty impressive. I guess that's a really thing about technology is that in some ways size matters. Like the US is great because you have a single market of close to 400 consumers, and they all speak English. And Europe, you have a bigger market, more consumers, but they all, there's like some 26 different languages. The size is important. As far as on the market size, idea, corruption, size isn't really a key factor. We see a lot of smaller companies creating a lot of startups. Universities. Look at Israel. Why is Israel so successful? Great universities, entrepreneurial culture. Hard to say. I'm sure there's other factors. But I think what's interesting And I was, for example, responsible for economy, so for economy in France. Not that I would have did that, but I'd look at this and say, like, any country likely train. You're not limited by lack of size. A smaller country, smaller company, do that. So what we see is energy has really, really done well. Energy, security, job recruitment, solving real problems. So I think that always goes back to really important things. Um, so the amount of money being raised now starting to be slowing a little bit. I think that's normal. The VCs are sitting on a ton of capital, and I don't think that they even know where to put it. So, there's no reason to raise more money. And of course, venture capital very competitive. I don't know how many fund managers or how many venture capital groups. Like when I started in the industry, like there was like 20, and now like there's literally thousands, tens of thousands, and there's people that are specializing the different things. Almost everybody is really interested in B2B because B2B the risk side. But then on the B2B side, there's so much specialization of the funds. There's tech, there's energy, there's female founders, there's just every kind of specialization you can imagine. Again, this goes to building out the ecosystem. Uh, me, abandoned by Loki. Um, Go back here. Well, I'm gonna have to pick up the pace. Maybe here. So EMEA, so Europe, Middle East, Africa. Oh, not the number. I don't. Um, but their share keeps growing. You know, so the world is flattening. Before everything happened in Silicon Valley, a couple years after that, Silicon Valley and Austin. Now in the US, there's regional tech hubs everywhere. Same thing happened in Europe. Thing I should say is happening in Europe. India, do the same thing. It just keeps spreading. Again, I think one of the interesting things about the culture, the culture spreading around the world. Um, let's look at UK. Um, I know the UK economy has slowed more than other economies, and then there's also Brexit. UK early stage is still going strong. The big rounds have really fallen off, even more than in other places. But of course, they raised a lot of money last year. And this is kind of a point I want to get to. They call this super clusters. Um, you need great higher education institution to have tech. So we see in Holland, between Amsterdam, Leiden, they have a super cluster. Paris, we have the Sorbonne, all the other things. And now in London. And I saw this in the US. Many years ago, there was Silicon Valley, and everybody was expected. Gosh, that sound is terrible. Everybody was expecting Austin to shoot up. They just didn't have the educational institution like Austin. I mean, like the Silicon Valley. The other thing that's really important is the other macro factors, like immigration. You need to have an environment where it's easier to get employees, skilled tech workers. Often that means immigration. So if you make immigration too hard, kind of kill your tech sector. So these things need, and then you need skills. So interesting. Okay, well, that gives you an idea. Numbers are off, but there's a lot of reason to be optimistic. Reason number one, I have four reasons. Five, four. Four reasons. So tech is now global. The global culture, global venture capital markets. People are building global products that are set to go global from day one. So I think that's really exciting. The other thing, tech's reaction to past crises. So every time, been increased focus, increased maturity. Another thing, increasingly, the Legos are getting built out. So what I call the Legos is everything we need to build a tech company or a SaaS. So from your CRM to artificial intelligence to no code, low code solutions, everything you can do, make sure that your people perform really well, that your processes are great, and so those things, we have those blocks. I call those, all these blocks, macroeconomic things, these different blocks. I call these the Legos ecosystem. That's my little term there. And then finally, I think you need to understand the role of education. The more brilliant people you have, more startups you have. These people that don't want to go to work, they want to create things, they want to do things, they want to change the world, they want to have impact. So educational institutions are so important. That's especially true. That's especially true historically. Like, I think one of the reasons why Silicon Valley was so successful, it's right next to the Bay Area. So it's right next to the Bay Area. You have University of California, Berkeley, Stanford, and then like 50 other great universities. A lot of really talented people. From there, I want to go into this article about not being able to raise our Series A. So I read the article. Just there. Um, Last thing. So they talk about this not being able to raise their money. Really interesting. They were looking to raise 10 million. They built a solution for salons, for hair salons, for people taking appointments. growth was going well. They were looking for more money to grow their business. And investors balked. They didn't want it. And so the quote from the article is they couldn't get the money on the terms they wanted. But they were already servicing businesses. So, and they had employees. And of course, the entrepreneurs are really committed to their idea. So they went out and got a bridge loan from existing investors, keep the business going, keep growth going. But my question is like, what did the investors see? If they're growing the business, is it not profitable enough? Were they unable to establish a road to profitability? I don't know. It's not called out in the article, but I think increasingly, this puts a focus on KPIs and being able to show your vision, how you're going to execute. And it's interesting because as I've been in technology, originally I thought it was important for the CEO to be a good salesperson. That's true. Then I thought it's important for that person to be a good marketing person. That's true. Then I thought it's important for that person to be a great operations person and a teacher. And that's true. But increasingly, I think you need a really good person with financial. And that kind of brings me to my next point, Ben Murray. So just briefly, the report I showed you was from Deal Room. Really, I'm a big fan of Deal Room. And that article I found was on Sifted. I'll put these up. That maybe. There's the article. And this is the last article. So this last article is from a guy called Ben Murray, an American. People talk him a lot, increasingly so. And often you can get templates of his ideas. So he has an Excel model of what we're talking about here, the last link. So he talks about this KPI, average cost service. I'd be really curious to know what amount of B2B SaaSes know this number. And this is such an important number to know. And the other thing to know is, as sales grow, as you're growing your sales funnel, and maybe you're adding other products and services on the back end, that's all great. But ideally, your service model costs are going down at the same time. So not are you revenue growth, but you're also increasing profitability. So I think technology investors who, are going to be increasingly looking at these things, paying very close attention. Yeah, get here in a minute. I can pull around with my microphone. How's that? Sounds better? Oh, it does sound better. Oh, great. Oof. Gosh, killing me there. Okay. So our guest should be here in any minute. Has anyone here heard of this number? Average cost of service. Anybody? Really curious to see what our guest is going to have to say today. Our guest again is Adrien Chaltiel. He's the CEO and co-founder of a company called Eldorado, and they help put. I'll let him explain. But they help put investors and startups together. Okay. So we'll be talking with him. I'm really curious to see what he's going to have to say about these KPIs and the importance of CFOs to help people get money. You have to say about that. How about you out there in the audience? What are you seeing? Oh, yes. Adrien? There? Right. Our guest is here. All right, Adrien. We're on. How are you today? Can you hear me? Uh, Adrien? Able to hear me?
Yeah, yeah. Hello, Steve. Can you hear me? Great. All right, no problem. But I can't see you just for the recording.
Uh, let's see how that works. You still hear me okay, Adrien?
Yep, yep. Perfect.
Okay, great. Okay, we haven't done this in a while. So
Mhm.
if you want to log into Twitch, you can watch yourself on Twitch, or you can see me on Twitch if you feel better. Or on
Okay,
LinkedIn.
let's.
You just have to
I
make
will
sure
check.
you turn off the
Yeah,
sound.
yeah, sure. Uh, okay, I think we'll be on LinkedIn. I think I will be able to see on LinkedIn. Just wait a minute.
You can see yourself as well.
Yeah, double time. Like with the video and so on. Yes, yes, I can see me.
Okay,
That's
great.
perfect. Then I can see you. Most important. That's
Awesome.
perfect.
Flattering. Thank you. So I kind of started today talking about what's been happening in the industry for investments. It's off compared to last year, especially
Definitely.
on the big rounds. And lots been going on. And so we're gonna hit you up with the questions. But first, maybe tell us a little bit about yourself and El Dorado.
Startup campus in the world or so something like this, which is in France, in Paris, and I'm the CEO and founder of Eldorado, which is a digital platform to help European entrepreneurs to raise funds and to find money. We built this company like 5 years ago, and we are partners with B2B Rocks since several years. We are having lots of content regarding VC's investment, and I'm really passionate and interested in how I can help entrepreneurs to understand more what is going on, to be more prepared by searching financing and prepare their financing strategy.
How did you come up with the idea for the company?
Yeah, actually, I'm entrepreneur since 15 years ago. When I was a lawyer, but I haven't practiced as a lawyer. I was a, like kind of a trainee, and I decided to create startups while being at the law school. So in the Paris law school, and I've begun like creating 2 and 3 different startups in early 2010. And I sold one of my company to a media group called Leaders League in 2014, which have kept me for 3 years as a kind of a vesting period,
Mhm.
as we tell.
Yeah, very
And
common.
after that, yeah, very common after a sold out of a company. And after that, I was wondering what I can do. So I was wondering of working with a VC, creating a VC, or be part of investing, because I've been a business angel since 2012. So at the beginning, like of the rise of the French tech and the European tech as we know it today. And by thinking of a new project, I asked myself, what are the needs of entrepreneurs right now in 2017? And it
Mhm.
was definitely how to be more proactive and productive by create their company more quick. And to benefit of the experience of previous VCs and previous entrepreneurs, the rise of new VCs also. So I asked myself if we can build a platform. I love marketplaces, and a marketplace to help entrepreneurs to build their company. And after thinking and building the first MVP, we decided with my 2 co-founders to focus on the more financing part of building a company, which is the biggest part and a really most common part. Like every entrepreneurs are thinking about how they can fund their company. So that's why we decided to create Eldorado with this idea of helping entrepreneurs to find the best money strategy for their venture.
Yeah, that's really interesting. It reminds me, of course, your name reminds me of the gold rush, and the companies that made the most money from the gold rush were actually the companies around the gold rush. So,
Yeah.
Wells Fargo and Levi's, of course, they're still there today. So, what is changed? My microphone's so weird today. What has changed
It
over the
works.
last 12 months for raising money?
So definitely, we are the party is kind of over, as we said. So it's not really hard to see that the landscape is changing between like 2022 and 2023.
Mhm.
And it doesn't even take like a crystal ball to say that 2023 will be going to be a challenging year. So what changes? It's several factors like funding is down for several reasons, but mostly because of the rise of the interest rates. So it's a
Okay.
first a factor which impacted directly the fundraising, but also like overseas investments are down, and deal flow is also down. And because of all these factors like rising interest rates or the tumbling of the tech sectors as well, like with even before 2022, we had SoftBank, WeWork, and so on, like some kind of a clue that the world of VCs will be a little bit tumble.
Mhm.
If you add with that like the war in Ukraine, the weakening of the valuations, and the IPO pipeline, which was reducing more and more, it's even harder factors. And not, let's not forget like Silicon Valley Bank, crypto crashes, and so on. With there's plenty of factors that changed the world of VCs and funding from 2022 to 2033. So the question now is, has VC world hit a little bit the bottom,
Yeah, like
or yeah, this is your question. I let you
yeah.
to ask the question.
Yeah, well, no. Yeah, I had that on my list of questions. Like, has have we hit bottom? Have we hit the bottom of the market, or is still further to go? Hard to say.
Yeah,
Um,
it's hard to say. Let's keep it for the last question. I will try to think about it like during our meeting.
well, all the factors you mentioned, I think I agree with. Seen those two and consider those, and I don't think it's one thing. It's multifactorial. I think prior to 22, 22, 23, the focus was on growth, and now the focus is on profitability. Uh, would you say that's true, or is that too simplistic?
I think it's simplistic because from one hand to another, like it's only says that from my opinion, like we build a venture ecosystem even in US and even though in Europe, with only this hyper growth possibility of building ventures. So all the valuation, the acceleration processes, the type of venture companies like VCs, family offices, corporate ventures, they were all like building companies with hyper growth. And
Mm-hmm.
this is why we already have talk about like this bubble burst in 20,000 and in 2008,
Mm-hmm.
which was quite different. It was a real burst, a bubble,
Yeah,
sorry, a real bubble. And
yeah,
it is not the same for today. Like we just invest too much money and spend too much money because the world was built as settled with this criteria of building the next Facebook, the next Google, the next Amazon, and so on. And every companies are not built for doing like this. So when you add to that like new venture companies and new venture capital firms that are first-time venture capital firms, they are following this trend, and this trend is not working for every company, and this is the first thing. And the second one is that even if you are investing less money, it doesn't change the fact that the valuation were really high. So for the next round, it makes some difficulties for the entrepreneur and so on. So by having this uh, lots of money at one point between 2021 and 2022, people were paid to invest money, like literally, like to spend a lot of money. So this rise of money and this possibility with lots of companies and good companies, good entrepreneurs to capture this money and this flow by thinking about only hypergrowth has been kind of a mistake. Like we forgot that a company has to make profits.
yeah.
This is the most common thing for every company, and you have a lot of example. If we make like the frauds like FTX or so on aside, we have a lot of example of companies. For example, in the food tech industry, the mobility and electric mobility industries that have been funded with such gross amount of money that hasn't been justified because at the end of the game there couldn't even been profitable. So this mind thinking of investing in companies has to evolve and to be more responsible by thinking about companies need to grow to have a kind of an hyper growth, grow fast, but at the end of the game, who can buy my company? And we forgot about it. Even in France, if I may just think about an example, we are really proud to have 30 unicorns. It was the rise in the competition of how much unicorns the European
Right.
country has. And we forgot to say, okay, who can buy those unicorns at the end of the game? And when you think about this, you say, we built 30 unicorns, but some of them are not, they will have some big difficulties to be bought.
Yeah.
So by thinking about this, you think there's a middle point to think about is like financing companies and venture capital is definitely not dead, but needs to be like more responsible of the money they made and are giving to a company, and which valuation, and what are the financing strategy by the end of the day. If it answer well your question.
No, it really does, and it fits in with my perspective on things. Um, I was around for the dot bomb bust, and so people invested in companies like dogfood.com or petfood.com, and you can just buy pet food at the supermarket. You don't need to put 200 million in a company to do that. So
Mm-mm-mm.
it's so I think every time in 2001 was September 11th, 2008, 2009. Every time there's a maturation process. Investors, also the companies, uh, and so the companies get more skilled at building roadmaps to grow to profitability. The investors get more savvy about what they're looking for, and it sounds like there's a restructuring. And typically, it's
Mm-mm-mm.
good for the industry. So we'll have to see. Oh.
Yeah, yeah. And what we can add, like, because we are discussing about the various crises of the ecosystem, is that one common point of 20,000 and the bubble burst and 2008 and today is that it is in every part of the world. The like there's nowhere to hide for a company
Mm.
like the only region that is having some kind of uh, like a better situation than the other is North America, but it's a little bit likely due to OpenAI and Stripe multi-billions dollar deals. So it's kind of the common point is really like with all the local factors and the global factors, the investments are going throughout the world by this downturn, and it's something really particular by all these crises. So it's important for the entrepreneur to bear that in mind as well. There's nowhere to hide, as we say.
Where to hide? Um, I showed a report earlier, and it showed that France for the first quarter investment in early stage and Series A was actually up 7%. What
Yeah.
is there something I don't understand?
No, this is the case because there's two different things that you need to understand because of the European market and especially the French and German market. The first thing is that a crisis make like 6 to 9 months to come to us after, like, and even the growing of an ecosystem, and we always have this kind of different timeline of having the results of a downturn. So this is the first thing. The second one is that our pre-seed and seed ecosystem is built differently. We have a lots of different and various possibility to find pre-seed and seed in Europe than in the US, especially with a strong business angel ecosystem, with a lots of individuals that are really interesting in investing in companies still even after the crisis because some of them has made so much money during the covid and the covid-19 period of time that we have a lot of individuals and even like non-tech people that want to invest in early stage startups,
Mm-hmm.
and because they are confident on having investors, even if we have this pullback in Europe and even the US investors are pulling back in Europe as well, which is something we can maybe discuss after because it's really important for European VC ecosystem. But with this strong precedent seed and various type of people precedent seed ecosystem, the lower of the valuation and the fact that the crisis is coming like 6 to 8 9 months after for us, it seems that the seed ecosystem in France is more, and even Series A is more resilient. Um, and maybe I can add the last thing I think I'm thinking about. Like it's uh, we have an ecosystem which is not it's more conservative, even like Series A and Series B. So the French investors and French tech investors or German tech investors are taking much time, more time than US investors or English investors to put money in a company. They are more likely like conservative. So even through 2020 and 2021 and early 2022, when the amount and the ecosystem were flourishing by making lots of big deals and so on, the the um, the amount and so on has been a little bit less than in the US, for example, because
Mhm.
of this conservative. So the downturn is also a little bit less, and that's why also the seed is more resilient as well.
Okay. Having worked for a few French startups, they typically raise less money and have to do more with less. So,
This is it.
that-
I agree.
why are the U.S. investors pulling back?
So I think like 2019 to 2022 has been like the rise of US investors and more likely like the cross-border deals from a year to another. So last quarter, seed funding, so kind of a dramatic collapse. But as we say, like in France and Germany is getting better,
Okay.
the seed and Series A. But like the European VCs, even the French and German and English VCs aren't making like long-term commitments on how they will do Series A, Series B, Series C, late stage funding, let's say, because of their impossibility for them to tell what the valuation will be, what the metrics should be for an investment in these kind of stages. So while the late stage startups are experiencing like today the worst funding pullback as we hear over the past like 10 years, um, as we said, and even if the early stage funding are performing and more be more resilient, the pullback by US venture firms, um, as we know it, are on deal counts, like on a deals like that they are going to be in a 3 years period. For example, like the Europe's first quarter, as we said like before, is the lowest continent that has
Mhm.
been seen since first quarter of 2020. But yes, the because of this impossibility for European VCs to understand how they can make big deals and with how much valuation, uh, the direct consequences like the Europe's UC investors, US investors are going to be pulled back uh, at least like for the next year, and so that's why we say like 2023 will also be a kind of difficult year ahead.
I think until the war is over, we may be in trouble, or it may be challenging.
Yes, I think so. Or like the war will use less resources and the capacity of a country like to be more stable with this European war is going to be hopefully ended
Mhm.
after we will be able to see like international investors doing cross-border deals with European investors as well.
One of the consequences of the war is higher interest rates, and
Yeah,
so that's unfortunate.
yeah,
Uh,
yeah, because the money were a little bit less expensive before, so
exactly. Cheap money.
cheap
Cheap
money.
money. Cheap money. Um, yeah, I always one of the things I asked earlier on another show I did, which is like companies like Twilio that were a unicorn. would they even be invested in today's environment?
Um, yeah,
Gotta take
I
the bait.
think no. Yeah. I don't think so. I don't think so because, like, we are obviously in a global economic downturn, as we say. So having money depends on the strength of an idea and on the strength of the ability of an entrepreneur to build this idea. And even if startups like how I can translate it, we have a very famous French investor called Jean-David Chamboredon, who is one of the godfather of our VC ecosystem. He said, like, it's easy for an entrepreneur to navigate when he has the wind in the back than to have the wind in the front. And this is in
Yeah.
this period of time that we see how resilient are the entrepreneur that are able to navigate the turbulent
Yeah.
economic climate. So that's the first thing. So it's not you definitely cannot compare when a company were in less turbulent economic climate than today, because of the factors that we say, a lot of factors that we say for, but they are directly impacting the viability and the originality of an idea, and even more the amount of cash you have in the bank to build your product and your service. So this is the first thing. So I don't think they will be able to have a round in the same condition as we have seen before. They usually need to maintain their position and to try to sell a little bit more, but it is definitely a different story between 2021 and 2023. Like if we compare like 2 years ago, I don't know when the deal was of
I don't
uh,
remember either.
yeah,
But
but even though, yeah.
they were a hyper growth unicorn, not
Yeah,
so focused on profitability. And now
yeah,
they've had to pivot and they've got the wind in their face. So we'll
in their
see how
face,
they're able to
yes.
do. Yeah.
Yeah, and we usually say like it's the difference between a nice to have startup with a must have startup, and a nice to have product and must have product. Like it doesn't change the fact that building a startup is always difficult and about like dealing with the unknown,
Mhm.
but the global factors are drastically changed. So striving a business like the one you have been telling is definitely how we can have the cost of money has to be like the really priority, and even like thinking about profitability for companies, which was absolutely not the case like 2 years ago.
I think you need to show how you're getting there, how
Yeah.
you're getting to profitable. Um, I wanted to ask you a question. I showed an article earlier about average cost of service. So
Yeah.
calculating how much it costs you to deliver your SaaS to your customers or another
Yeah.
product to your customer. And I thought it was a really interesting KPI. It's a guy called Ben Murray, who's a CFO, and he trains other CFOs for startups. And the point of this is that when I started in tech, I thought the CEO, the founder, should be a great salesperson. Then I
Yeah.
thought later he should be a great marketing person. Then I thought a great operations and educator.
Mhm.
And now increasingly I'm thinking you need to have top notch financial people as part of the company to make your company marketable and to show people how you're going to be profitable. Do you agree with that statement? Anything you'd like to add?
Definitely. We need to have a new generation of entrepreneurs or co-founders that are able to, if I may, like reward the terminology that you are using, if I understand well, is what we call the capital efficiency. Definitely, it's like
Yeah.
uh, how efficient
Mhm.
is a company to spend the money and to operate and grow. So, as we said at the beginning, like 2021 and 2022, a lot of company have been raised lots and too much money, as we can say.
Mhm.
And the valuation were too high and so on. and all this fundraising has been like really far from what a capital efficiency should be. And you can see some kind of VCs that have been like a little bit doing less deals than the other, like the same amount of deal that they have been doing in 2018 or 2019, by saying, okay, we can pay a little bit more, but if the cost is too high, if the money raised is too high as well, we will not do the deal, and we are okay with that, like, because
Mhm.
we need to perform, and we need to show our LPs that we can return money, which is the the purpose of a VC. And we also forget about this, like investing in three unicorns that are unbuyable is not returning money to investors. So we forgot about it, like this as well. So yeah, capital efficiency is always something really big to well, today more than ever. uh, so you have various metrics to calculate. I won't be able to discuss about like even more in English, like, but I think like the burn, multiple the cost of acquisition ratio that you have in your company, the direct return on invested capital. So what you return with €1 on capital, what you return on revenue, and so on. And you want have also like venture capital efficiency ratio of what they are doing with their money. But even though if I'm not, and I'm a CEO of a startup, and I'm a board member in various startups, I think there's a lack of mathematic people like in company that, and financing people, and CFOs, like even at the first and second round of the company, because spending money is really simple. Like spending 1 to 10 million is really fast, really simple.
Mhm.
Like lots of people can do this. It's not impossible to be an entrepreneur that is spending money. I think that this is not the more ability, like, and even though like raising money is not so difficult, if you have a good product and a good strategy. Even today, it's longer and a little bit harder than in the last 2 years. But raising money, like raising 10 billion, is much more easier than making 10 million of revenue in your company. So the capital efficiency, yes, I definitely agree with you. It will help to balance like the growth with return on investment, and tracking these with lots of metrics. And we can discuss about what are the metrics, but with tracking the metrics would be a really good starting point of being more reasonable by using venture capital as a good way to grow their company, uh, his company, but your company. But even though if you have this people or a co-founder that is really sensible and a good sensitivity with capital efficiency, I definitely think this is a good move for your startup ecosystem right now.
Like every time I've been a part of a startup, just a huge learning experience. Um, Interesting to see what it takes to be a successful founder. Pretty hard job. Um,
Yeah.
where do you think our industry is going? Do you have other predictions about where do you think is going to happen? I mean, a lot's happened with alternative financing. Do you think that's going to continue to be a thing, or do you see a role there? Are there other things you're seeing?
Yeah, there. I can speak about like France and Europe. There's lots of non-dilutive possibility to fund your company, like banking, public funding institution that are really keen on helping the ecosystem to be more resilient,
Mm-hmm.
um, especially in various sectors like deep tech, large deep tech companies like robotics, AI, and even Web3 or so on. Like they want companies not to be shut down, like to lose everything they have been building since the last 2 years. So they are taking the risk with banks and the state money, like to help the startups to be more resilient. And with this possibility, and what if I'm taking like crystal ball, if funding, as we say, will be more strategic and prices with this cost of revenue things and so on, we will see like companies that will be in Europe. I'm saying in the US, I don't really think it's the same, but in Europe, we will see like companies that will be using different forms of funding for different purposes, like long-term funding to be a more to have more high R&D process to their product or services, like equity and so on, but also like entering in a new market or to scale a product with a new market. They will maybe use like banking solutions, non-dilutive funding capital and so on, to be used for a more niche goal and a more step-by-step strategy that will be linked with what we said before, like the capital efficiency, and to say we will do less quick, but we will do more with more proof of concept with different step and step. So the rise of the period of time of fake it until you make it, I think it's a kind of over. We are not more in a period of time like prove it and then we fund it, like a period of time, like so.
That's interesting. Oh, that's really. Um, we're gonna shift a little bit off topic. What are some of your favorite online resources? Where do you go to learn?
Wow, a lot. I think like I'm spending like 3 years or 4 years ago, I was spending like 1 hour per day on Instagram and 5 minutes on LinkedIn, and I think it's the opposite right now. Like I'm spending a lots of time on LinkedIn. If you have a good use of LinkedIn, you can have a lot of resources that are coming to you. So it's the algorithm, obviously, but also the person you are following are key. So in France, we have like Michael Jackson, which is a European investor that is really important. Boris Golden. There's a lots of people that I'm following, and as I'm interacting with their content, I'm having the possibility to see them, and they are sharing a lot of things. So the first thing I will answer to your question, it's like social media, definitely, and Twitter as well. Twitter is a big resource for venture capital. If you are following the good people,
Right people. Okay.
then I've created email address or inside in my professional email address labels uh, for to be not spammed with newsletter, but I'm obviously on Crunchbase, PitchBook, and so on, but also on really small newsletters or podcasts, and all regarding the industry. You can find easily like all the resources online which gathered all the people you should follow and so on. But my strategy is to say, yeah, I'm subscribing in all these contents, and I'm
Mhm.
putting them in a part of my email box. And every Monday morning, I'm using 1 hour to dig in that big amount of resource with keywords. For example, if I need to see what they are talking about, like about the VR, Apple, what has been that has been released yesterday, or the OpenAI strategy for the next 2 years, and so on. I just have to use like research on the newsletter, and I do have what the best content that I need regarding it. So yeah, I will say that this is a good strategy for me because there are an infinite amount of content for venture capital.
Yeah, yeah, makes sense. That's a really good idea. All the content comes to you. You just organize it and then go get
Yeah,
it when you needed it.
yeah, exactly. And I can share like Andresen Horowitz article, like first round review, Crunchbase, Mattermark, PitchBook Daily, and so on. But
Mm.
I can't, like, nobody can read everything. So
All the
I do
time,
have
right?
like yeah, and all the time. Yeah, you are if you're doing so, you will have this fear of missing out that is going to drive you crazy. So
Yeah, really interesting. I hadn't thought of that. Actually, when I got my start in technology, Mark Andreessen was just starting his second company, Cloud,
Wow.
which is one of the SaaS companies, and ended up selling it and making money. He
Yeah.
always it wasn't a successful company, but he sold it.
Oh,
Um,
okay.
yeah, wasn't a unicorn, but great idea, and he got bought.
All right.
Uh,
Success.
yeah. We have a couple questions we'd like to ask just to get a feel for people. Do you have a funny anecdote about your career, something you learned, or something like that? Anything, a little story.
Uh, let's think about it. Like, yeah, I've been by chance interviewing the French President Macron by being like selected in the French tech ecosystem, and it was the beginning of his career as a president, so
Yeah.
2017. And I asked him the exact same question that I've been asking for him in 2022 with a bunch of entrepreneurs. So I was invited this time, so it was not like a complete chance. So in
Mm-hmm.
2017, I asked him like how he is going to fuel the seed fundraising with structuration and seed funding, and how he will help like to have private money to drive LPs directly to seed because they are not taking this risk. And I asked him exactly the same question in 2022 with the metrics that shows that it hasn't changed a lot. And so it
Mm-hmm.
was a funny moment because he answered quite the same thing, but with different formula. So politics and venture capital is not an exception. Politics are good storytellers.
Good. Okay, what is something you would like to improve in our industry or change in our industry?
Um, I think it is linked with what we are saying right now. Like when we are have built Eldorado, it was like to help the entrepreneurs to have a more well understanding of how it is difficult and how it is adapted or not for them to raise money, and
Mm-hmm.
how they can have a good funding strategy. This was funny. Your question is funny because as I built like 6 years ago Eldorado and was a good growth in France, but the problem still the same. Like entrepreneurs are lost and are in the middle of kind of a jungle when they are comes with what is my funding strategy. So but I think I want to improve a lot and to help the entrepreneurs to understand this new chapter we have been like building and this democratization of startup ecosystem and fundraising ecosystem. And now we have this crisis, and after we will have a new chapter. And I think what I want to improve is two things: is how entrepreneurs can fund their company by being more reasonable, and how VCs can be more focused on their capital efficiency, as we say. And on the other hand, is how they can build product that are directly doing an impact for our society, environment, and to have a direct impact for people, like more must have than nice to have startups. It will really be more helpful for entrepreneurs to understand that they can put their skills on making our daily connections and our even our planet a better place by
Yeah.
doing innovation. So I I'm following this impact and this climate tech fast growing ecosystem as well.
Yeah, I think educational technology and climate tech, energy tech, vitally important to our future. Must haves.
Totally must have.
Okay.
I totally agree. Yeah.
Okay. Continuing on with our little questions here to get to know you. Three
Yeah.
words you would use to describe SaaS, B2B SaaS.
Ah. um, software as a service. No, this is for
Yeah.
yeah,
Or our
cloud
okay.
software and users.
Okay. Good. Last one. This is the B2B Rocks question. What's your favorite rock song?
Ah, this is a really tricky question, and I didn't know that you have this question. And I will say like smells like Teen Spirit.
And we're not too far apart generation. Okay. Quickly back to your company. You guys provide a newsletter where you give advice and lots of content about people looking to raise money, correct?
Yeah, exactly.
Okay.
As we say, like education, find money is really important for us.
Good. So people, if they want to go learn about this, they should hit your website.
Exactly, or my LinkedIn because I'm a kind of a top voice, LinkedIn top voice. I will
Mm-hmm.
build a strategy to have more English content as well in the future. But yes, this is our blog plus my LinkedIn and Twitter is a good way like to see what we are working and telling to the people.
Well, Adrien, thank you so much for your time today.
Yeah,
And
thank you.
look forward to seeing you at Station F.
Definitely, if you come by Station F, give me a call and see you at B2B Rocks. Definitely will be really great. So thank you for having me, Steve.
You have a great day. To everybody out there, our
Bye.
next show's on the 13th. It's going to be on AI, how to use that for video. And thank you so much for your time today. No, that would be the end slide. Thank you so much, everybody. Bye-bye.